So in this lesson, we're going to look at the E for event in the ruler's principle. Now, if everything is lined up and you've determined your entry price or your exit price, then the only way that you're going to get your crypto at your price will be for an event to happen. So we as wealth creators know that we depend on the psychology of the market in order to create fear or to drive this greed factor. And it's only when we're getting into the fear that buys will trigger, and those buys is simply where our price point was positioned in order to give us an asymmetrical deal where there's massive profits. Right, so a couple of things in terms of the event that we need to understand. We need to understand that value stays value. So if you've determined the value of a crypto, that value has got nothing to do with the fears or the greed of the market. In other words, the market sentiment. It's got nothing to do with that. Keep that in mind. So a value stays value even if there's fear. And the biggest thing that creates fear will be uncertainty. So you must stay rational while there's a reason to fear. In other words, when everything around you goes berserk and everyone tells you it's bad and the economy is bad and the crypto market has burst and the bubble has burst and the market has crashed, all of that, you need to keep in mind what's the value. So the only way that you stay rational when there's so much fear around you is if you understand the business. And your business basically is to manage your mind. That's what I've said in the previous lesson. So what you need to do, if we really think about it, is to look forward for the price to go down if you've discovered a great idea. And that's what it's. So to be a wealth creator is actually a waiting game, because you always wait for the game to come to you. You always wait for the price. You set a price and you wait for that price to come to you, right? Or you set a price and you wait for the game to come to you if you want to sell. Right, so let's quickly go and have a look at the graph. And this is the typical cycle of a crypto or stock or property. You're going to find that there's a disbelief that this thing can't work, and then it's going to rally up to a euphoria state where people think flippin' they're the greatest and they've made a lot of money. Then there's going to be a drop, and this is basically the price point. So you should buy there or anywhere below this green line. That is basically what we are waiting for. So if I'm looking at the Dreyer crypto psychological indicators, we can see that this is a buy phase, this is a wait phase. That small phase there is the sell phase. This is a wait phase, and this is a buy phase. So we can see from the general public, from the laggers and ziggers, that there's fear, and therefore we are entered into a buying phase. So this is also known as the blow-off phase. And the problem is, in the blow-off phase, we don't know when that cycle and how that cycle is going to turn out. Is it going to be the orange line or is it the green line? And from what I'm seeing at the moment, it looks like a deeper phase than what's expected, and therefore it looks more like a green line than the red line. Okay? Now, what is causing this? Well, it's caused by fear. As I've said, there's a 32.81% drop. There's a 63% drop. There's a 42% drop. There's a 38% drop. There's a 33% drop. And we can see at the moment we are in an 83% drop since January, right? That is massive. So unless you understand and unless you know how to handle your own, let's call it fears, you're going to be in a position, or the majority of people are in a position where they think they're going to lose all their money. So the question then is, why this drop? And this is what I want to focus on in terms of the event. So as we can see, there's a massive drop happening, And what I want you to do is to don't listen to what people are saying. Look at what they are doing. And always follow the money. So this is an incredible. If it's property, if it's a stock market, if it's a new business, if it's cryptos, if it's a specific crypto, if it's blockchain, whatever, always follow the money of the smart people. So let's quickly give you a down run to see what's happening. In September the 12th, Jamie Dimon says that Bitcoin is a fraud and that he'll fire any one of his traders that is buying Bitcoin. Jamie Dimon is the CEO of JP Morgan. Now, this is what he says. Let's forward. Because of that, there's a 30% drop in literally 2 days, from the 12th of September to the 15th of September. Over that weekend, that 15th, guess what JP Morgan and Morgan Stanley are doing? They are the biggest buyers of the Bitcoin funds in Europe. Check here. On the 24th of January, George Soros says that Bitcoin is the biggest bubble and that it's going to burst and that it's the worst investment in the world. Bitcoin fell by 44%. Now, let's fast forward up to April. In April, his $26 billion family fund has approved to buy cryptocurrencies. So we can see at that price of 6,600, that's when he started buying in. So at the moment, the price is even lower than that. And the reason for that is these people know something that the general public do not know. Let's look at the 7th of February. Goldman Sachs basically said that Bitcoin is going to drop to zero. It dropped by 21%. And guess what happened? In April, they buy a cryptocurrency trading platform for $400 million. Christine Lagarde of the IMF said that all central banks, this is in the beginning of this year, should band together against cryptocurrencies. She says nothing about that fiat money, the dollar, is 100 times more used in illegal arms and illegal drugs and human trafficking. She does not say a word about that. 2 weeks ago in Singapore, 2 or 3 weeks ago, she said that the cryptos, the blockchain, that all banks and governments should look at money to put it on the blockchain because it's safer and better. But it's controlled money. It's not Bitcoin and Monero and currencies like that. Larry Fink, the chairman and CEO of BlackRock, says, you know what cryptocurrencies and Bitcoin are good for? For money laundering and drug dealing. Now, guess what? They are launching their Bitcoin EFT. So what I'm trying to tell you is please don't listen to what people are saying. Look at what they are doing. So let's look at some of the billionaire hedge fund managers. Stephen Cohen, who's worth between 12 to 14 billion, is buying Bitcoin. Andrew Horowitz, an early investor in Airbnb, Skype, Facebook, and Coinbase, launched a $300 million fund. Mark Lassery of Avenue Capital, he bought $17 million worth of Bitcoin. Wellington Capital, who's got $1 trillion in assets, are getting involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume, now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, their CEO, David Solomon, he's seriously into Bitcoins. It gets better than that. A couple of weeks ago, the international exchange, ICE, the parent company of the New York Stock Exchange, confirmed that it'll be launching its Bitcoin future product. When they said it was the 12th of December, they pushed that out to the 24th of January 2019. Their product is called BACT, and that will allow customers to receive and deliver of actual physical Bitcoin. And more importantly, all transactions will be backed by actual Bitcoin plus insurance. Now, people, this is going to be great because it's going to be a game changer, because it's going to be the first feature product that will enable customers to buy digital currency through a major exchange. And it simply means that cryptocurrencies is one step closer to realize its full potential as a secure, as a low cost and a high speed way of transferring money, which means that institutional investors like pension funds can suddenly have more options than ever before to investing and transact in digital currencies. BACT will provide institutional money managers with custody in a regulated and a secure platform. And many of the pain points that these people, the managers, have got for institutional managers is simply going to disappear. There's another company called TD Ameritrade. Now, they recently announced that they are in partnership with an exchange called Eris Exchange or Eris X. Now, Eris X is going to be like BACT. It's a regulated digital exchange with custodial solutions. And I think this is great news because it's going to not only give institutional investors the opportunity to get in, but retail investors as well. And why is that so big? Because they're sitting with 11 million funded customers' accounts, and they're sitting with 1.2 trillion, not billion, trillion under custody. Now, can you imagine what's happened when the average investor can buy cryptos directly on their brokerage account? You know, all the pain of signing up for new exchanges, figuring out the public and the private keys, and all the hard work that the initial investors needed to put in, that's going to disappear. Of course, they're going to have control over that, by the way, and that's the only reason why they're doing this. Another serious player is Fidelity Investments. They recently announced that before the year is out, and we're in December already, that they be in cryptos. And that's big. Why? Because they've got 27 million customer accounts and 6.9 trillion in assets under custody. So they're going to make it easier to buy cryptocurrency. So in less than a year, the Bank of America, Morgan Stanley, JP Morgan, George Soros, Goldman Sachs, BlackRock, Stephen Cohen, Andrew Horowitz, Mark Lassery, Wellington Capital, Susquehanna, and others have come out with crypto-related news. And I'm not even talking about the Bitcoin exchange-traded funds, the ETFs. So please don't listen to what people are saying. Look at what they are doing. And these people are, just follow the money. That's what I'm trying to tell you. Now, why do I say follow the money? These people are already rich, my friend, and they've got a reputation, and their reputation is to make money. That's their game. So if Bitcoin is such a bad investment, why are these people getting involved with millions and billions? And why all the negativity? Well, I can tell you why. Because they have to get the price down so that they can get more of it. And that spells only one thing. There's a major event, and we're in the middle of that event. And this is the reason why I'm doing this to get this training out, this education out, so that the average person can begin to understand what is happening, and that there's a massive transfer of wealth happening right now. I would say the biggest transfer of wealth is happening right now. And the greedy wants to get more, and because they've got so much money backing them, they can force and drive the price down. So that's what I wanted to tell you on the event. Now, how do I know this? Well, you just look at the psychology of the market. And it is not difficult to spread rumors or to say something and then do something else. So please follow this in setting up a system and a strategy for yourself. So at the moment, there's an incredible event busy happening. I don't know how long it's going to last, but this is an incredible opportunity once we've got that understanding, once we've set up the systems, once we've set up the structures and the strategies. So please be serious about this whole thing and make sure that you follow the ruler's principle when you set up your strategy. So the next one then is going to be the R, which simply stands for reduce risk. And that's going to be the next lesson. So see you there.